Welcome to Explain the Charts, your go-to channel for in-depth market analysis. Today, September 11th, 2025, we're putting Amazon, ticker Amazon, under the microscope, looking at both the latest news and detailed chart data to understand where this tech giant might be heading. Amazon has been making headlines, with its Project Kuiper satellite internet business recently securing JetBlue as a client for 2027, a piece of news that significantly boosted the stock last week. Simultaneously, Amazon's strategic bets on AI infrastructure, including a substantial stake in Anthropic and the development of in-house Trainium2 chips, are fueling investor optimism and are seen as strong growth drivers. Despite these positive developments, the stock experienced a notable dip after its Q2 2025 earnings report on July 31st, primarily due to concerns over slower-than-anticipated AWS revenue growth and conservative Q3 guidance, as well as broader macroeconomic risks and competition in its cloud and advertising sectors. Let's zoom into the daily chart to see how these events have manifested in price action over the past few months. Notice the sharp decline around early August, clearly illustrating the market's reaction to the Q2 earnings report. The stock tumbled from around $234 on July 31st to as low as $211.65 on August 4th, a drop of over 9% in just a few trading sessions, perfectly reflecting the reported 7.4% after-hours decline. However, following this correction, Amazon began a steady recovery, slowly climbing back towards pre-earnings levels, which aligns with the subsequent positive news regarding Project Kuiper and its AI initiatives. The recovery has been robust, but the stock has encountered significant resistance in the $234 to $236 range, which served as a pre-earnings high. This area, specifically around $236.53, is identified as a flat base buy point by Investors Business Daily, highlighting its importance as a key price level. A sustained break above this resistance could signal a strong bullish continuation. On the flip side, the post-earnings low of approximately $211 to $212 now stands as a critical support zone. Should the stock falter, we would expect this level to act as a significant buffer against further declines, absorbing selling pressure. Looking at the broader trend since April 2024 on the daily chart, Amazon has been in a general uptrend, marked by higher lows and higher highs, even with the recent earnings pullback. The 52-week high of $242.52, reached on February 4, 2025, remains the next major resistance target if the stock can decisively break past the $236.53 level. Now let's switch to the 1-hour chart to examine the recent price action in more detail. Here we can see the nuances of the recovery and the current consolidation pattern. Notice how the stock moved upward through late August and into early September, largely driven by the positive news flow. However, yesterday, September 10th, the stock experienced a sharp drop, closing down over 3% at $230.33, according to our data. This short-term reversal, while significant on an hourly basis, could be attributed to profit-taking or general market jitters, considering the broader positive news. Bringing up the 15-minute chart for September 10th, we can clearly see the intraday volatility that led to yesterday's closing price. The price started the day around $237.515, peaked around $237.95, but then saw sustained selling pressure throughout the trading day, pushing it down to close around $230.33. This highlights how quickly sentiment can shift in the short term, even when longer-term fundamentals appear strong. For short-term traders, this 15-minute view reveals the importance of quick reactions to changing market dynamics, identifying selling clusters and areas of concentrated volume. So, what are the reasons to be bullish on Amazon? Long-term, the company's aggressive investments in AI, particularly its stake in Anthropic and the AWS Bedrock platform, are poised to be massive growth engines. Project Kuiper is also an exciting new venture, creating new revenue streams and expanding Amazon's total addressable market. Analysts are overwhelmingly bullish, with an average target price of $261.76 and some, like Morgan Stanley, predicting targets as high as $300 to $350, implying substantial upside from current levels. Amazon's continued dominance in e-commerce and cloud services, along with expanded grocery efforts, further underpin this bullish sentiment. The strong IBD composite rating of 95 suggests superior fundamental and technical performance. Conversely, reasons to be bearish or cautious include the persistent macroeconomic risks and heightened competition in the cloud market. The Q2 earnings report showed AWS growth slowing relative to rivals, and this could continue to be a headwind. Concerns around President Donald Trump's tariff plans also pose a significant threat. While there's a 90-day truce, any escalation could lead to a panic-induced sell-off and pressured margins, as highlighted by Seeking Alpha. Furthermore, some analysts suggest the stock's valuation, with a P/E ratio of 35.148, is elevated compared to its sector median, raising questions about its immediate upside potential. The recent price dip could be a warning sign if these bearish factors gain more traction. For traders, it's crucial to watch for a sustained break above the $236.53 level, reinforced by strong volume, as this could lead to a rapid ascent towards the 52-week high of $242.52. A successful breach of $242.52 would confirm significant bullish momentum, with a high likelihood, around 70%, of targeting analyst averages of $260 to $270 within the next few months, assuming positive news flow continues regarding AI and Kuiper. However, if Amazon fails to hold above $228 to $229, especially with increasing selling volume, it could signal a retest of the $211 to $212 support zone, with a moderate likelihood, 40%, if market sentiment sours or tariff concerns reemerge. A breakdown below $211 would be a bearish development, potentially indicating a move towards the 52-week low of $161.38, though this is less likely, around 20%. Given current fundamentals, unless a major unforeseen negative catalyst, like severe tariff escalation, occurs. Always keep an eye on broader market trends and the performance of key tech peers, as Amazon often moves in tandem with the Magnificent Seven group. Monitor for any official statements regarding AWS growth, Project Kuiper milestones, or shifts in global trade policies. These external factors will be critical in determining AMZN's short and long-term trajectory.